Welcome to our series of different movements, and on this first one I'm going to discuss, it's called the classic. All right, so when I'm discussing the different movements, I'll give you the full name here, then in the parens, like the CL here, if I'm marking up a chart, I always mark up push 2, and or sometimes push 1, and I'll tell you what I think that particular movement is, and CL on a chart should mean the classic. Okay, so what are the characteristics of a classic? Well, push 1 is contained by the previous push 2 pullback. That means you've got 3 pushes coming down here. Push 2 came down and pulled back. And 3 down, 3 down. Push 1 that we're looking at for a classic won't take out the push 2 pullback. It won't take it out. It's contained by it. Push 2, well, it's going to take it out. Push 1 can take it out. These are sub pushes. The red ones are sub pushes. The sub 1 can take it out. Sub 2 definitely should. And sub 3 definitely will. Okay, it can be 1, 2, or 3 movements up there, however it is. And your push 2 is, well, they'll be coming back here and stop hunting things. Because remember, and looking at these things, we're looking at what the market makers are doing. The market makers know that people went long here. And for them to go long, the market makers had to sell to them. The reversal traders, they went long in here. The only reason they can go long is the market makers sold to them. That means the market makers are short. So they have to balance the book. They got to come back and clean all these guys out. They can't have them making money because that means the market makers lose. So what do? They come on back. They can be in a vector, 2 moves or 3 moves, like we have here. They come back here and they stop. And they're getting the breakout traders right in here. The breakout traders initially hit the stop loss down here. The reversal traders hit the stop loss down there. But as the price moves up, they move their stop loss up. And you got 1 up, you got 2 up. They go, oh, look at that. If it comes back, it can come back below that, but I don't want to come back and take me out. I don't want to lose any money. So they move their stop here. And the market makers comes down and takes them out. Now then, as far as they can come down, they can come down. They can come down into the middle because, as I said, when on these guys that are reversal traders, or even if you have a really long pullback in here, it could be too big for some people's stop losses, so they put it in the middle. Okay, so you can see it's something come down here into the middle. Doesn't always have to stop up in here. But if it comes down past the push 1 pullback, that's no longer a classic. Okay, it's an entirely different type of movement. Okay, so in coming down, remember the market makers are trying to screw all the retail traders. They're trying to get they want to get these guys out first, then they want to induce people to go the wrong ways and going down. So we're coming up, you got the trend trader. See right in here, the trend trader. You got 1 up. You got all these other ones going up. A higher high, a little lower, uh, a higher pullback. So we go 1 right in here. It's still above this one here. So it says, oh, that looks good. They're lined up with this. We'll go long off of that. So the trend traders go long, and sayonara. It doesn't work. um, so where are we? But look what they're doing on the opposite side. They're inducing these trend traders to go long and taking them out. Then here they're creating a trend line in here, and they're inducing anybody for when it comes back up to here. They're inducing them to go short, and that doesn't work very well. You can get a vector up from push 3, or you can get 2 or 3 pushes up there. Okay, so they're usually smooth and well-balanced movement, but sometimes they're just herky-jerky. But the main thing to recognize in here is you got to push 1 up, and push 2 goes up, but it comes back and stop hunts the breakout traders. Push 1 comes back very close. You can come back up to here, and here someplace. It doesn't come back all the way here, or it can come down into the middle. If it comes down below this, is no longer a classic. Okay, so where can you find this type of movement? It's usually, it can be for a full day. Like you can have the push 1 occur in Asia, and then push 2 occurs during London, then push 3 happens during New York. Okay, so it can take up a full day, and that's pretty much what we're going to be looking at. We're going to be looking at the setups that occur during the day. They won't necessarily be Asia, London, New York. They could be Asia for a couple of them, and New York for this one. I don't know. We'll see. But you can find not only for the full day, you got pullbacks in here, and you it can you can get it. Push one can have classic movement. Push two can have a classic movement. Just pull back can have a classic movement. Push three can have a classic movement. They can all have sub movements in them that are classics. So you can look for them in all these different places here. For right now, we're going to stay the full day, and we're going to ignore the pullbacks as far as what type of movement they are. We want to see the big movement so you can understand it. So the one place you're not likely to find a classic movement is the push one pullback. Unless one is really big, which it can't be because it can't take out the push two. But sometimes you get a little squeaker in there. So if you see it, you can go for it. So what are the rules? P1 is contained by the previous two pullback. P1 can't take out the previous two pullback. The current P2 has to stop hunt the extreme of P1. This. It has to come back and stop hunt this. It can be a little bit above it. It can be in the middle of it. But it can't come down here. Okay, so I just said that. So those are the rules. Go ahead and make a screenshot of this so you got the rules so you can follow them through all the time. And now we're going to look at some flashcards. Because with knowing the rules is fine, but unless you practice it and are able to see it in hindsight, because that's what we're doing. The day is all done. We're going to go back and examine and see it to see what happened during the day. And so that way you can develop the sense that, oh, I can see that. Because if you can't see it in hindsight, no way in heck are you going to see it in real time. So I got these October 7th, 2024. That was last week. So I got a lot of Forex charts in here. Let's see how they go. So we're going to put a clip on there, number it, and then where the push 2 came back and stop hunted them in here. So we had our first push one come down here, and they put their stop losses up in there. And these guys in here, when they were reverse trading, they went out there. So this is a pretty good place to have their stop loss come into. They have their stop loss at. It's either down here or it should be in here, and they got them. Okay. At the same time, remember as I was saying, you got this thing. See here. Let me see if I can open this up with paint. Here's paint. It's wrong screen, but we'll bring it up here. Look at. See what they did? You know, they're inducing people to go the wrong way right in here. Or if you're coming over here, look at. See what they did? Coming down here, you got a low, a higher, a high pullback, a lower low, a lower pullback, a lower low, a lower pullback. Nah, not really. See, they're screwing with the retail traders all the time. They're trying to induce them to go the wrong way, and then come back and take you out and induce more people to go the wrong way again, so they can come flying on down here. Okay, so that's let's see here. So that's one of them. The next one. Let's see where the clip goes. Aha, you thought it was going to come in here, didn't you? Not necessarily. So here we go. We got a 1 up, a 2 up, and 2 came back and stopped one of the breakout traders of push 1. Right in there, huh? That's pretty good. So remember, it's to see in the classic is good. If you can make entries here, it's absolutely. But the idea is that even if you don't do it here, you've seen a classic, you know it's going to go up. So you look for pullbacks in here, then you can continue up. We'll get into those later, but right now you just have to see what a classic looks like. Oh, here's another one. So we got a clip in, and there's our numbering, and our pullback is right here. Okay, so you came right in there. That's where our pullback was. See, there's that little vector down. It came down, didn't go whooping right by it, so there's probably got a lot of people filled right in there, and that's right where they came. Here's another one. Put a clip on it, number it, and where did push 2 come back to? Uh-huh. See right in here? So how did they get past push 1? They came down here a little ching ching. Okay, so they didn't quite touch it. If you look at it, this was down a little bit. What they did is they induced people along here. They took out any trend traders that were going down here, and they came in and they came back and got these guys. Here's our next one, our clip and our numbers, and look at push 1 is here. 2 came down, came back, and stopped under them. Why could it come right to the number? Because look at how they came down. Then they go blasting away by it. They didn't have to be right in here. They didn't have to come up in here because it was so long ago. Everybody's moving the stops down, saying, "I don't want to get stopped out." Because look what they did over here. They came up and said, "Okay." Then they pulled down, and they said, "Oh, geez, I don't want to lose any money. I don't want to lose any money." So they moved it to break even. They didn't lose any money, but they sure as heck didn't make any, did they? Here's another one. And I clip, and here we go, our numbers 1, 2, 3, and they came back right above this. Why is it above it? Because look at, they just vectored above this point. The breakout traders get filled up here. They get filled there. They get filled down here. They get filled above it because they vectored above it. They just shot right up there, then pulled back. And they shot up there is when they filled everybody probably up in here, all the breakout traders, and they came back and said, "Okay, we got you good." But you can see in the push 1, it's got 3 pushes in it because the low is over here. See right at the base of the clip, you got a 1 that came up, and you see a little pullback right in there. The 2 came up, came back in here. That's a classic. Look at that. The 3 came up. Then here's the pushback, pullback of push 1. I said we weren't going to get into the sub pushes, but I couldn't resist on that one. So our next one, our clip goes right there, and where is push 1? Tell me. It's right there. Okay. See how push 1 stayed inside the trend line, didn't go out. It vectored up pretty strong, yeah. Got everybody all excited. And then it kept going. Okay. So push 1 kept everybody in line as far as thinking it's going to be going down, even though it went up. And they came back and they stop hunted right there. Why? Because look at how they filled them. They didn't just go putting across there. They went boop, get a little blast right up there. So the people with this pending right there got filled up here. They just ran their orders. Here's another one. So where's our clip going? It's going right there. And where do you see it? Here's our 1, 2, and 3. Now 2 came back right in here. See, came right back up in here. So why did it come right back up in there? Look at, they induced past this one. Look at all the people they induced right there. They went above that. They induced them. And they came back and got these guys, all the breakout traders who had moved their stop losses to break even. The ones that said, "Oh, whew, man, it didn't get me, it didn't get me." So they came down. Then, boop, they got them. Sorry, what can I say? All right, so here's another one. I clip, and where's 1? Do you see it? There it is. It's right here. And you see what they did? They came back into the middle of this thing. Because you had the breakout traders went below here. I mean, they get filled right in here. But you have the reversal traders who went reverse right in there, and they've still got their stop loss to break even. So they get the breakout traders and the reversal traders. They took out any trend traders that may have gotten on this trend going down. Okay, and look at what they did here. Let me see if I can get this one right. Oh, let me see here. Open with paint. Here it is. Let's see here. Look at, if you come in here, look at what they did to all the trend traders. Look at that, huh? You got a low, or you got a 1 down here. You got a low, a pullback. You got a lower low. You're still a lower pullback. And look at, it's going down, pullback, lower pullback, lower low, lower pullback. Hey, yeah, it's going short. It's going short. Nah, not today. All right, let's look at the next one. There you go. Put the clip on it. See how the clip goes? See how it follows along this trend line in here? Remember, the clip stands for center line of inflection points. Price comes up to zing, comes up to it, backs off, backs off. The inflection point right there. Look right here. It goes the other direction, comes down to the inflection to this here, and the price jumps off it. It jumps off. It doesn't have to go far off it, but it just shows a resistance point. Okay, you see how it's going on here? See how it's the center line of inflection points. That's our clip. So where's push one? There it is. There's two. And what did the push one breakout traders do? Our push two, I'm sorry, our push two pullback came back into the middle here. Even though a lot of guys were filled in here, we still did these reversal traders. They were up in here, reverse up in here. Okay. Remember they had a sell stop right there. So when it came down, their stop was up in there, but as the price came up, they said, oh, I don't want to get stopped out. I don't want to lose any money. I don't want to lose any money. So they came to break even, and they get the breakout traders to push one. They also get the reversal traders right here. And look at all the people they induced long. And of course, we take this and extend it down. They ruined all these trend traders' trends. They can't get in. And if you take this line, put it up to here, it'll come out to here. So these guys here can't get in for a trend going down. Such a shame, huh? But if you know what you're looking for, if you see what this is, if you can recognize this is push one, you can get into different places in here. Here's another one. So where's the clip go? You should be able to just look at the chart, tell me where you think it should go. Okay, here it is. Now how about numbering it? It's not what you think. One's way down here. Why is it way down there? It can't be up there. That would have taken out the pullback I pushed too. This is the only place it can be. Did you see it vectored down and vectored out? Railroad tracks. It hung out there for a while. Then it started moving on up nice and slow. But there's no big vector above it. So the stop on, they came back to it. They came back right to it. That's where the breakout traders were filled, right there. And they saw this stuff in here going on. They said, well, I don't want to. They saw one come down. They saw two come down. They said, it should bounce off there. But if it does, I don't want to lose any money. I don't want to lose any money. No, no, fear, fear, fear. Boom, they're gone. They didn't lose anything. Of course, they didn't make anything either. And they're totally livid. They said, the price goes, I was right, I was right. So they totally vindicate themselves. But they're out of the market. All right, so where's the clip go here? There it goes, and you see push one? There it is right there. So why is it there? Well, of course, all the breakout traders hit the stop loss and up here. The reversal traders were right in here. So what the market makers do? They induce longs here, breakout traders going along there. They induce longs going right there. They're not going any higher because they get these guys. They induce there, they induce there. The trend traders, they're shot. Okay, so they got everybody going the wrong way. They got all the ones out who got the direction right, and they're inducing everybody else to go the wrong way. So everybody's the wrong way, no one's the right way. There they go. Here's another one. Okay, our clip and push one is, there it is right here. Okay, you got three pushes coming down into it, and that for a significant pullback. And we also look at where they come in here. Why they only go there? Well, look at how they were filled. Boom. The breakout traders, this wasn't just a little simple little thing. They vectored right down in there. So what are they going to fill them? Down into the vector, of course. Boom. That's it. They hung out here for most. This is a 5-minute chart, so they hung out up in here for most of the time. Then they just vectored down at the end. That's what they do. So everybody was filled in down here, and what they do, they induce a lot of people to go along here. Why? It's just, oh, this is resistance. This is resistance. This is resistance. It's not resistance. It's an inducement, man. That's the market maker screwing you up, setting you up. Okay? They set you up to go the wrong way, and they take out the ones who went the right way. That's what they do. Next one. Clip goes right there. Didn't we see something very similar to this on the last one? Isn't this really similar to what we just saw? Look at it. It is. Okay, now we're going to go into a few futures charts. We looked at all forex before. They're all just last week. There's more too, but I don't want to bore you to death with those. So here we are. We got the futures. This is ES, the S&P 500, the future, and we put a clip on there, and look at push one. See how push one is contained inside the trend line here? It doesn't break above the push two pullback. Okay, it keeps people thinking, oh, it's still going down. It's still going down. The trend traders are seeing this lower this point right here. So it's going down. So they go short, and well, that didn't work, did it? And so our trend pullback came right into here, right? Because that's they just nuzzled above there, then go shoot above it, so they can come right back into here. Okay. And then what's this one here? Our clip goes right there, and push one is right up in here. Okay. And here's the our pullback. Our pullback came to here. Why? Well, first off, it was down when they went long in here. It wasn't by a big movement. Their stops were put up in here, and our reversal traders went short in here, and they're moving them down. And I think we'll see more on the 15-minute chart, whatever. But they came down. They induced a lot of people to go long in here. They screwed up all the trend traders' trades. There's no longer a trend going down in here. And they took out the breakout traders, the reversal traders, and the market makers are in great shape. So this is the end of our flashcards. I think there's 16 of them. And what I've done is I put them all the original flashcards without any markings on them, like this one. I put them in a zip file on a site you can download. At the bottom of this video is the name of the video, and at the very end there's a link in there. Click on the link and they will take you to the site, and the flashcards will be downloaded in a zip file. So what I'd like you to do is what we call homework. This is an entertainment that I'm doing here. I'm showing you things, but the only way you can see them and understand them and use them in real life is to do your homework. Because you can't say, oh yeah, I got it. I'm sorry, you don't got it. Not that maybe a few of you do, but it takes a long time. We're talking about an evolution of thought. So you really have to put your time into doing the work, because otherwise, I mean, it gets complicated. So unless you can see all the different variations, it just won't work, and you have to start your homework now. Sorry. So what I want you to do is download the zip, open it up, and on the flashcards, just go in there and put in the clips like I showed you. Just put a clip in, number it, and look at how the push 2 came back and stopped it on push 1, and see if you can identify all the places that's screwing the retail trader. Look at them. Okay? That's what I'm asking you to do in this part. Now then, after that, after you've done those, you can compare them to this video. Then after you've done that, I'm going to have a separate zip file for you to download. It's a zip file of flashcards you haven't seen with classic movements on them. Your job is to find out what the classic movement is. Probably just be one, and it could be two in a day, but it'll probably be mostly one. So you got to put a clip on them, number them, and look at how the push 2 came back and stopped on and push 1. I'll put another video on later this week that will go over those flashcards, and so you can see how you did. So that's great for that stuff. That's homework there. But the idea is you understand what a classic movement is now. So while you're trading during the week, and you should really do this at the end of the day. You should really do it at the end of the day, because when you're live, I don't expect you to see it. But at the end of the day, you take a picture of the 5-minute chart, take a screenshot of it, save it, and mark it up, and see if only mark it up if you think you see a classic in it. If you see anything else, forget it for what I'm trying to do right now. Just mark up the classic movements. If there's no classic in there, don't take a screenshot, don't mark it up. All right? So good luck.